If you've been turned down for a car loan recently, I want you to listen to what I'm about to tell you very carefully, because most people assume they got denied because of their credit score, and sometimes that's true. But in 26 years of running a used car dealership and overseeing thousands of subprime deals, I can tell you that one of the biggest reasons bad credit customers get denied has nothing to do with their score. It has everything to do with how they filled out their credit application. I'm Gary. I'm the bad credit car guy. And today I'm going to show you exactly what's happening behind the scenes when you hand that application to a finance manager, and why being anything less than completely honest and accurate on that form could be costing you an approval you actually could have gotten. Let me start by telling you what a credit application actually is, because most people treat it like a formality. They fill it out fast, they guess at a few things, they round up here and there. No big deal, right? Wrong. That credit application is the foundation of your entire deal. It's the story your finance manager is going to tell the lender about you. And if that story doesn't hold together, if the numbers don't add up, if the dates don't match, if anything looks off, the lender is going to flag it. And flagged deals don't get approved. They get declined. Here's what lenders are looking at on that application beyond your credit score: how long you've been at your current address, how long you've been at your current job, your monthly income, your monthly housing payment. These four things, combined with your credit profile, paint a picture of stability. And stability is what subprime lenders are buying when they approve your loan. They're not just looking at your past. They're trying to decide if you're a good bet going forward. Now, let me tell you about the three fields on a credit application that people fudge more than any others. And I want to be clear. I'm not calling anybody dishonest. Most of the time, people aren't intentionally lying. They're guessing. They're rounding. They think it doesn't matter that much. It does. Number one, time at residence. People guess at this all the time. They moved a couple years ago and they put down 3 years. Or they moved recently and they're embarrassed about it, so they put down longer than they've actually been there. Here's the problem. Lenders verify this. They use data providers, companies like LexisNexis, Experian, Rent Bureau, data aggregators that track address history. They know when you moved in. And when your application says 2 years and their data says 8 months, that's a red flag. Number two, time on the job. This one gets people all the time. Someone just started a new job a month ago, but they put down 6 months because they're embarrassed or they think it'll hurt their chances. Or they include time at a previous job to make the number look better. Lenders verify employment too. They call your employer. They use the work number, which is an employment verification database used by most major lenders. If your start date doesn't match, that's a red flag. Number three, monthly income. This is the big one. People round up. They include income, they're not sure counts. They forget that lenders want gross monthly income before taxes, not take-home pay, not tips they haven't claimed, not money from a side job with no documentation. When your stated income doesn't match what verification services are showing, that's a red flag. Now let me tell you what happens when those red flags show up on your deal. Your finance manager puts your application together and submits it to a lender. That lender runs your credit. And they also run your application data against their verification sources: LexisNexis, the work number, address history databases, income verification tools. What they're doing is cross-referencing what you told the dealer against what their data is telling them. When everything matches, your application looks clean. Your finance manager can build a solid story around your deal and work with the lender to get you approved. But when things don't match, and it doesn't have to be a big discrepancy, even small ones matter, the lender starts asking questions. They send the deal back to the dealer with what's called a stip list, a list of conditions they need met before they'll approve. And here's where it gets complicated. Every step, every condition is another chance for the deal to fall apart. Every back and forth between the dealer and the lender is time. And in subprime, time kills deals. Too many red flags, and the lender doesn't even bother with stips. They just decline the deal outright. And here's the part that kills me, because I've watched this happen hundreds of times. The customer could have been approved. Their income was real. Their job was real. Their residence was real. But the numbers on the application didn't match the numbers in the system. And that's all it took. So here's exactly what I want you to do before you ever sit down to fill out a credit application. 1, Know your exact move-in date at your current address. Not approximately. Exactly. Check your lease. Check your utility bills. Check your bank statements for when your first payment went to your new address. If you've moved in the last 2 years especially, lenders pay close attention to recent address changes. Have the exact date. 2. Know your exact job start date. Again, exactly. Check your offer letter. Check your first pay stub. Log into your HR portal if you have one. The work number has your start date. The lender has your start date. Your application needs to match it. 3. Calculate your gross monthly income correctly. If you're hourly, take your hourly rate, multiply by the hours you work per week, multiply by 52, then divide by 12. That's your gross monthly income. Don't use your take home. Don't include overtime unless it's guaranteed. Don't include income you can't document. If you're self-employed, this is a whole separate conversation, but be prepared to show bank statements. 4. Be honest about your housing payment, whether you rent or own. Put down exactly what you pay. If you live with family and pay nothing, put 0. Don't make up a number that looks better. Lenders verify this too. And 5. When you sit down with a finance manager, tell them everything. The good, the bad, and the ugly. A good finance manager, and I was one for 26 years, can work with the truth. What we cannot work with is surprises that show up after we've already submitted your deal. Give us the real picture up front and we can build around it. Look, I know it's tempting to put your best foot forward on a credit application. I understand why people do it. But in subprime auto financing, the best thing you can put forward is the truth. Lenders in this space are not expecting perfect credit. They're not expecting a spotless history. What they are expecting is a clean, consistent application that matches what their verification tools are telling them. Give them that, and your finance manager has something to work with. I'm Gary, the bad credit card guy. I spent 26 years on the dealer side of this desk. Everything I put out on this channel is based on what actually works. Not theory, not textbook answers. Real experience. If you haven't already, grab the free guide in the description below. It's called The 7 Things Dealers Check Beyond Your Credit Score. It goes deeper on exactly what lenders are looking at when they review your deal. Subscribe so you don't miss the next video. And if you have a question about your specific situation, drop it in the comments. I read all of them. I'll see you in the next one.